Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day. The government recently proposed to dilute the penal provisions in three laws governing environmental protection, air and water pollution. The Environment Ministry says in the draft that it wants to weed out the fear of imprisonment for simple violations. It has reignited the growth versus environment debate. If it passes through, will this proposal end up sacrificing environmental protection at the altar of business interests? Let us find out.
Pollution extracts a heavy toll on the economy and on people's health. Last year, 63 of the world's 100 most air polluted cities were in India, and a recent study by a US research group was an eye-opener. It claimed that all 1.3 billion residents of India live in areas where the annual average particulate pollution level exceeds the WHO safe limit. At current levels, the average Indian life expectancy is shortened by 5 years. According to a study published by The Lancet, pollution led to 2.3 million premature deaths in India in 2019, the highest in the world. Around 1.6 million of these were due to air pollution, whereas 500,000 were caused by water pollution. And against this backdrop, the Ministry of Environment, Forest and Climate Change's proposal to dilute the penal provisions in three laws dealing with pollution has triggered a debate. According to the ministry, the idea is to decriminalize the provisions to remove fear of imprisonment for simple violations. The government plans to scrap the provision for imprisonment for the first default, which is currently up to 5 years, but raise the penalty from 1 lakh rupees to 5 lakh, extended up to 5 crore rupees. For repeat offence, the penalty amount would be equivalent to the damage caused. Imprisonment would follow if the defaulter failed to pay both the original and additional penalty. The amendment also proposes the creation of 3 funds which will be used for the remittance to the affected parties.
I think decriminalization of these 3 acts will definitely give a loose hand to the industries, especially it will give them a way off from coming to the courts of law or avoiding any form of closure or actions like that. The big players will be the big beneficiaries. If you want to really dilute some of the penal provisions, you want to increase the penalty for some of the minor violations, I think it should be a very clearly well-defined list of things, and the range of those things should be mentioned. The future will be a mix of civil as well as criminal nature of the act, because we cannot completely decriminalize these acts.
According to Greenpeace, the economic cost of air pollution caused by burning fossil fuels in India is estimated to exceed $150 billion annually. A 2013 World Bank report puts the total cost of environmental degradation in India at about $80 billion annually, with outdoor air pollution accounting for the highest share. It is estimated that the health costs of water pollution in India amounted to about $6.7 to $8.7 billion per year. Further, a major study by CII, Dalberg and Clean Air Fund conservatively estimated the impact of air pollution on Indian businesses at $95 billion or 3% of the country's GDP as a result of lost productivity due to absenteeism, reduced consumer footfall and premature mortalities. The government's proposal to amend the 3 laws comes in the backdrop of a Niti Aayog funded study which estimated that from mid-2018 to mid-2021, the government lost revenue worth Rs 8,000 crore, the industry Rs 15,000 crore and workers around Rs 500 crore of income due to 5 major environment-related judgments passed by the Supreme Court and the National Green Tribunal. The verdicts led to 16,000 job losses while adversely impacting 75,000 persons in total. The report recommended the need to equip judiciary well to balance economic and ecological interests of the country. The judgments analyzed in the study include cases relating to the shutting down of Vedanta's copper smelter in Tamil Nadu, stopping the construction of Mopa Airport in Goa, and halting iron ore mining in the state. Notably, the conviction rate for violations under the three laws, where changes are planned to be carried out, has been low. While the number of cases reported under the three acts were 1581 and 647, convictions were just 42 and 25 respectively in 2020 and 2019.
The ministry is trying to convert these laws from being a criminal law to a civil law. And I support this change. The rationale is very simple. It is impossible to prosecute and put people behind bar because of environmental degradation. The history of 50 years of environmental jurisprudence in India shows that the criminal nature of environmental law doesn't work. And frankly, it has not worked across the world. The current law, which is criminal in nature, doesn't have credible deterrence, and therefore it needs to change. Across the world, environmental laws are largely civil in nature. Exemplary fines are imposed if you are found to degrade the environment or violate any law.
Since it came to power in 2014, the NDA government has sought to establish itself as a business-friendly regime, and one of the key means by which it has tried to fulfill this agenda is loosening environment protection laws. The criminalization of environmental laws might not have worked, and industry demands should not be dismissed out of hand. But given the vast sums India loses due to the polluting of its natural resources, shouldn't protecting them really be considered an essential part of promoting overall growth?
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The government also imposes green tax on goods and activities that cause pollution. Between October 2015 and December 2021, Delhi collected over 1,298 crore rupees as green tax from vehicles entering the city. Meanwhile, the last date for filing income tax is drawing close. In our next segment, we explain a few things we should keep in mind before filing the tax return.
If you are an earning individual, 31st of July is the last date for filing income tax return or ITR for the financial year 2021-22 and assessment year 2022-23. Early filing is advisable and it will save you from last-minute hassles. The Income Tax or IT department provides pre-filled forms to make the filing of tax returns hassle-free. But taxpayers should keep all the documents handy while filing the return and cross-check every field in the pre-filled form. For instance, individuals with multiple bank deposit accounts or small investments may miss reporting such sources of income. And to avoid any penal provisions, one has to ensure all the information is captured while filing the return.
Now, sometimes what happens is that a couple of items would have been picked twice over. For example, if you've had 2 jobs, then there is a likelihood of certain amounts being added up and, a different amount reflecting in your tax return. So it's very, very essential that when you do the pre-filling, to validate each and every cell, because ultimately as a taxpayer, the onus of filing an accurate return is on you. So, use the pre-fill option, but just check all the information. Sometimes, taxpayers come back and say that they have updated their address or they no longer live at a particular address, which is available with the department or is attached to their PAN. So all of these details also need to be checked and validated before, you can even begin filing.
Form 16 is a certificate under Section 203 of the IT Act 1961. It shows all the salary components of an employee and the tax deducted at source or TDS by an employer in a financial year. The TDS that your employer deducts is submitted with the IT department. Form 26AS gives you all the details of your tax submitted with the department. And one of the most important steps in filing an income tax return is to compare tax deducted in Form 16 with 26AS. Inconsistencies in details of a taxpayer in both forms is quite common. For instance, it might be a case where the TDS amount in Form 16 and 26AS are different. In this scenario, the taxpayer can reach out to the employer and get it rectified or ask them to file revised TDS returns. Always move forward to file a return after ensuring that pre-filled values in Form 26AS are updated with the actual computations that you have made. If an individual has missed declaring investment or rental proofs to the employer and a tax has already been deducted, he or she can claim refunds under the old tax regime by submitting all the valid documents. So, it is important to verify all the information on deductions. According to the new income tax rules, the interest earned on Provident Fund contributions are taxable if the amount exceeds 2.5 lakh rupees.
The government had amended the law to include a provision whereby the interest on employees' PF contribution exceeding 2.5 lakhs will be taxable. And the tax return form for the year ended March 22 has included this disclosure. But having said that, if my PF is with the EPFO, what we are seeing is that no taxes have been withheld for the year ended March, and we are waiting to see if this will be treated by the EPFO as income for the current year, which is the financial year 22-23, in which case the taxpayer may want to report it as income for the current fiscal year rather than in the previous year for which the tax returns are due to be filed now. So the point here is, while the tax return form has this disclosure requirement, it may not be very relevant if that particular interest amount is going to be reported in the next year as income for the next year.
So, the taxpayers must ensure they assess all the information while calculating the final tax payable and make sure to e-verify the return after filing it.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, India Inc. will kickstart the Q1 FY23 earnings this week with the results of IT major TCS on Friday. As corporate profits take a beating globally on rising input and borrowing costs, investors back home will assess Indian businesses' earnings growth amid a difficult environment. Our next report takes stock of which sectors may emerge as winners and which ones might lose.
The January-March quarter coincided with the beginning of the Russia-Ukraine war. The June quarter, however, assumes more importance as it is expected to showcase the full impact of the Russian offensive in Ukraine. From here on, investors are set to gauge the trajectory of India's corporate profitability as domestic and global macroeconomic cues continue to remain unsupportive. Against this backdrop, analysts expect the June quarter earnings to be a mixed bag.
Leading the pack of good results will be financials. Leading banks, leading NBFCs like home loan companies, auto finance companies, and the leading fintech company will certainly come up with very good results. There is impressive credit growth in the economy, and the momentum in credit growth is likely to sustain. Therefore, this is one segment to watch. IT also will come out with a very good set of numbers, particularly on the revenue side. The earnings visibility is good, but then there is no clarity on the margins of IT companies. Margins can be under pressure because of the rising employee costs, rising attrition in the industry.
Analysts are also bullish on the auto sector in particular, which they say has benefited from the sharp decline in input costs.
Also, despite weakness in the broader markets, we are seeing improvement in some sectors like auto inquiries, which is now coming out of the semiconductor shortage issue, coupled with price hikes and declining raw material prices like steel, aluminium, which is expected to improve margins of auto OEMs and auto inquiry companies as compared to low base last year. Apart from these, IT, specialty chemicals and manufacturing also looks attractive from valuation perspective. Consumer space is still likely to post muted volume growth, although we have seen pass-through in prices which could stabilize margin this quarter.
That said, experts expect metals to deliver disappointing numbers as they digest the correction in prices along with the export duties on steel and iron ore that the government imposed at the end of May. Kotak Institutional Equities says that most of its recent earnings downgrades from the Nifty 50 index has stemmed from the government's export taxes on metals and oil fuels. The brokerage's Nifty FY23 net profit growth estimate now stands reduced at 9.9% from 17.1% before the government's duty hikes. According to the brokerage, the new taxes are deleterious since they are on revenues and thus have a disproportionate impact on earnings. Moreover, the levying of new taxes may raise concerns among direct and portfolio investors about the overall investment climate in India. Domestically, market action will be stock specific today. Investors will also closely track US Fed's recent meeting minutes due to be released later in the night.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Good returns in the last few years brought a lot of new investors to the markets, but most of them were left disappointed due to the ongoing volatile phase. So to make sure that your money is safe, choosing a right online brokerage is the key. In this report, we list out qualities of a good online broker.
From long-term buy and hold investors to short-term day traders, all look towards online brokers to maneuver the tricky lanes of Dalal Street. Before you zero in on the online broker, you should understand what your investment goal is. Whether you plan to execute day and swing trades or find few solid investments to hold for the long haul. Based on this, investors need to choose a broker who has a diverse source of fundamental and technical data to generate higher returns. The second step is to figure out what type of broker fits your investment profile. Investors can choose 3 types of brokers. The first is a full-service broker who provides stock recommendations tailored to a brokerage plan. Then the discount broker who carries out only buy or sell orders for the client without any additional services. And the third is robo-advisors who provide financial advice or manage investments with moderate to minimal human intervention. Investors must also make sure that the brokerage firm is backed by a regulatory authority and offers protection against any fraudulent activities. Then comes the broker account fees. The brokers charge accounting fees or trading commissions for their services. For experienced investors, margin rates are as applicable as they borrow funds on behalf of the broker to take bigger positions in the market. If you plan to trade more than equities, make sure you know the fees to trade options, bonds, futures, and other securities. The next step is to check the broker's platform and whether it educates you profusely about the market or stock that you wish to invest in. Investors must explore the technical and fundamental tools. Check if the technical charts allow you to plot basic indicators like volumes, simple moving averages, RSI, and MACD. If any of these indicators are missing, it is better to move ahead. Additionally, the financial fine print and corporate announcements of the stock should also be watched out. Besides this, educational offerings like videos, podcasts, and written articles should also work for you. And at last, but not the least, is the ease with which an investor can deposit or withdraw funds once invested. It is prudent to review the deposit, withdrawal, and fund settlement terms of the brokerage that you consider. Most brokerages do not charge deposit fees. Make sure this is a must in your checklist. That apart, check how long does it take for deposited funds to settle and how swiftly can you withdraw the funds once deposited.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Several online brokers don't charge any commission for their service. These brokers earn through a process called payment for order flow. That's all for today. For more news and analysis, please log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.